The government has actually done some very good things to encourage innovation. The issue really is mobilisation of capital.
Hello and welcome to this week's Tea Break. I'm Al-Enazi and as always I'm here with my co-host Yuri. Joining us this week is George Robinson, hedge fund manager and philanthropist and founding partner of Oxford Investment Consultants. George, how are you?
Very well, thank you.
And what tea have you gone for?
I'm having a latte today. Normally I have a decaf coconut latte, but I thought I'd keep it simple today.
Fantastic, Yuri.
I'm back on the Chinese green tea again, my favourite, and part of that is to really reflect George's career, certainly your early career, George, when you migrated to Hong Kong, and I believe you worked for Cathay Pacific and the Swire Group. How important was that to you to get that Asian grounding in your career?
I was very fortunate to be able to do that. I studied engineering at university. I then went to work in Hong Kong for about 14 years. I lived in Hong Kong, South Korea and Thailand. And what I learnt there was how economies can develop at lightning speed and how they finance themselves and how they innovate. And it was an incredibly useful lesson for me.
My colleague Elisa, she just conducted an interview with Alan Law, the Hong Kong hotelier, and it's fascinating to see the investments he's making right across Asia. And he obviously has a lot of faith in these economies, whereas another Hong Kong tycoon we featured recently, William Louis, who runs the Kowloon Bus Company, he really distrusts the Asian markets and invests mainly in the US. Are we living in the Asian century or the American century?
The combined GDP of all Asian countries is almost 50% of world GDP. And at purchasing power parity terms, it's well over 50%, 27% as recently as 2000. So in 20 years, it's changed enormously. We've seen China hit a speed bump, and China's a really important part of this because it's about 50% of Asian GDP. They have had the most enormous real estate bust probably the world has ever seen, and they're still working their way out of it. They've also held themselves back by policy initiatives which have probably favoured ideology over growth. And then on top of that, we have the Indian economy, which is 25% of Asia, and it's growing all the time at 6-7%. So it will definitely be the Asian century.
The annual Fund Forum event in Monaco, which you were there at this year, Yuri, what did you find out?
I felt a bit jealous of you, Ali, because you had your sojourns in Paris and Geneva along the lakeside there. So I had to get over to Monaco, and I was chairing some panels there. These wealth and asset managers admitting they're not actually very good at forecasting and analysing these geopolitical events, and they really need to raise their game to work out what's going on in China, in Ukraine, in the Middle East. This also reflects your recent article about geopolitics, Ali. They also talk relentlessly about artificial intelligence and how this would be transforming the industry. George, at OIC, you're really at the coalface of this whole new wave of innovation coming out of the British universities. What are some of the highlights that you've seen there?
British scientists have punched well above their weight and have produced some incredible inventions. But we haven't been very good at commercialising them, and very often good science migrates its way across the Atlantic and gets commercialised by American firms. And what's changed in the last 10 years is we've got much better at commercialising science ourselves. We have a culture now of entrepreneurship. It's now not just acceptable, but encouraged for academics to become entrepreneurs. And we've also seen the establishment of some large pools of permanent capital, Oxford Science Enterprises, Cambridge Innovation Capital, Northern Gritstone. But it's only a start, and there's still a long way to go. We've got companies which are helping to cure cancer using immunotherapy, quantum computing, nuclear fusion, and of course a lot of companies involved in AI, and some of these have become unicorns.
Wealth managers face a growing productivity crisis, with advisors bogged down by admin tasks. But the experts say generative AI, promises major efficiency gains. But then there's another but. adoption is slowed by structural and human challenges. And keeping with the topic of AI, we have a piece by Nigel Green, CEO of the De Beer Group. He says that after a muted start to 2025, major US tech firms are showing strong earnings, expanding margins and ramping up AI investments. Despite investor skepticism and flat stock performance, fundamentals remain solid. Can the UK really become a centre for innovation, or are we now in a such a negative spiral fueled by disappointing headlines about the Labour government that nobody really wants to invest here?
The government has actually done some very good things to encourage innovation. They've given tax breaks to angel investors. They've even allocated some government money through the British Business Bank to invest in innovation. So they made a good start. The issue really is mobilization of capital, because as we have more companies succeeding and growing, but having relatively small revenues as they're getting going, they need a lot of funding. And it's the funding gap that's the problem, and that's the challenge we have to address.
Mm-hmm. So we need to ignore some of these negative headlines.
George, we have a great opinion piece here from Aman Rajan of Create Research and Matthew Bax from Citi, really questioning the whole investment industry, cautioning the stellar returns may well be behind us, and that there are record levels of dry powder. George, you set up the famous Sloane Robinson hedge fund in the 1990s and managed the firm through a turbulent time, including the financial crisis of 2008, of course. Can you see any parallels with today's headlong rush into private markets, with the hedge fund boom and bust which you presided over?
We've always seen booms and busts, and will continue to do so. So the characteristic of a boom is that money flows to areas where the returns of capital are high, and eventually so much money gets there that the returns come down, and then you have your bust. We've seen a huge migration to private markets recently. It's a lot of it to do for regulatory reasons, but it's also because private equity managers are much better able to create value out of the limelight in private companies. And those of them that have relied on leverage are finding it more difficult because the cost of capital has gone up. Those of them that are investing in AI are so far doing very well because there's so much money going into that area and so much activity. But in the end, all good things come to pass, and there will come a time where the big tech companies stop buying startup companies, and then we will see a bust of sorts, the same as we saw in the internet boom of 2000, but then we'll have another boom in something else. And hopefully it'll be in healthcare, new energy technologies. It will be in things which can make use of AI and all the money that's been invested in those. And hopefully some of that boom will happen here.
I've been thinking about what makes a good leader. And I met Yogi Duan. He was at Goldman Sachs before. He spent 10 years there. And he became very disillusioned with that whole banking model. Let's have a lot of people working with the family offices, that it's all about selling products. Martin Gilbert, I saw in Monaco. I mean, he's had a roller coaster ride over the years. At Aberdeen, I think they lost 80% of the value of the shares, and many others. But the thing that Martin was saying, that you have to be honest with your investors. There's no point in hiding when things are going badly. I think Jose Minea, he was talking about empathy with investors, with staff. There's not too many leaders talking about this empathy. And as we left the stage, somebody tapped me on the shoulder and said, do you know what? These soft skills are the new hard skills. Which are the ones that have really impressed you, and what sort of qualities have they displayed?
I think the first person I met who really influenced me was Jerry Manavici, who used to work for George Soros.
Yes,
and he taught me that you have to do your own work, do your own due diligence, work from first principles, don't rely on other people, and learn as much as you can. And of course, his boss, George Soros, was one of the world's greatest philanthropists, and he made money to give it away. We support education, principally bringing young people from the countries we invest in around the world and funding scholarships at British universities. We've supported the Wiedenfeld-Hoffmann Foundation, which is set up by George Wiedenfeld, the publisher, together with André Hoffmann, the chairman of Hoffmann La Roche, who's a great philanthropist and they do fantastic work bringing young people from developing countries and teaching them the skills that they need to go back to their own countries and make a big difference. And I have huge admiration for what Andre has done.
So it's a very optimistic message for the future, George, about the handover to the next generation, the likes of Ali, in fact.
I'm sure I will have those capabilities to be a leader in the future, just like yourself, Yuri.
Not me, but more like George, our studio guest.
That's it from us for now. Don't forget to catch our weekly episodes on the PWM website or our YouTube channel. And if you've got questions for our guests, you'll find everything you need online. See you next week.